Ewen Cameron Watt, Chief Investment Strategist at BlackRock Investment Institute, as well joins us right now on the show. Ewen, hi. You've stated in your 2014 Outlook report that it is an important election for India this time around, as a pro-reform government can, put India on track for a, growth breakout. How are you looking at the growth cycle in India on appointment of a new government, so far as we are still trying to defend 5%?
I think the great Indian growth cycle is really going to depend, to an extent, on what the election outcome is. And that's the difference between an overall majority, a strong coalition, or a weak coalition. In the case of an overall majority, which we think can only be won by the NDA, the BJP coalition, then I think you'll see greater certainty of planning, you'll see a number of reforms to speed up the economic process, and just generally a more confident business climate. In the event of a moderate coalition, let's say 230 or so seats, I think you'll get still some of that, but there'll be enough horse trading between the parties in the coalition to mean that business certainty is a bit lower. And of course, if you get a weak coalition with a whole series of regional parties with individual state interests at play, then that simply won't happen.
Right, Indian markets are up nearly 10% in dollar terms, given the currency gain. That makes India clearly one of the best performing markets across the globe. How do you rationalize this move?
Well, the classic model for investing in emerging markets is that when the currency is weak, as it was last year, the stock market becomes attractive, because if you have a floating currency, what happens then is that policymakers raise domestic interest rates to protect the policy. Raising domestic interest rates depresses the price of domestic assets. So you now have an asset price that's down in local currency terms and down in dollar terms as well. You have now two chances of making money. One, because the domestic asset has fallen in price, and two, because provided that real interest rates have been raised enough, the currency will rally. So you make money out of the currency and you make money out of the domestic assets recovering because they've got to an oversold position. That's what happened with India, that's what's happened with Indonesia, that's what's happening with Brazil right now. It's the classic model. You buy emerging markets when their currencies are very cheap because, as I say, you get two chances of making money.
So, Ewen, what would drive growth in India according to you? Would it be exports or domestic consumption?
India really is a domestically orientated story. Sure, exports have grown over the last few years, but the thing that's really held back Indian growth over the last couple of years has been slow, very slow investment and relatively subdued domestic consumption. The net exports have been impacted, or net trade's been impacted by energy imports, but really to turn the dial, the investment cycle in India needs to pick up again and domestic consumption needs to rally.
On the improvement in twin deficit and improving macros, the criticism the government has received is that the numbers have improved but the intrinsic problem still remains. Do you share that view that compression in CED fiscal deficit is difficult to really sustain?
The improvement in the current account is substantially down to two factors. One is the effective bar on gold imports, and the second has been reforming some of the fuel price, diesel prices and so on, which has reduced consumption and therefore reduced imports. On the fiscal side, I think that just takes a whole lot longer. India as a country, as we know, has got very substantial longer-term social obligations to meet. The big income disparity, rich against poor, is an important issue here. I think that the current account deficit is probably, what is it now, 2%? It's probably about as low as one would expect it to go. And of course, if the economy does pick up, and it is driven by domestic consumption and by investment, then the arithmetic is that the current account deficit will deteriorate a little bit again. But I don't see that as a big problem because the credibility of the Reserve Bank of India since Raghu came in as governor Governor Rajan's come in, has improved very considerably, and I think that investors are a lot more comfortable with the path of policy in relation to at least the monetary side of the equation now.
Even on politics, what could be the possible scenarios that you are working with, given the exit poll analysis so far? And is the focus on an NDA coalition or a Modi-led BJP government?
Well, those are two very different outcomes. And we have to remember that the polling is quite inaccurate, not in the sense the polls aren't taken properly, but for example, there's 97 million new voters, first-time voters, in this election, and trying to get a sense of the pattern of voting from those nearly 100 million new people is tricky, just as it is to get accurate polling in the rural parts of the country. We've seen this before. In the last two elections, the polls were not particularly good guides to the actual outcome. As I said, I think that a majority, which I think is unlikely, an NDA majority is probably unlikely, given some of the regional and religious issues in play. That would be a very positive impact for the country and for the stock market, and that's absolutely not priced in. I think what's pretty priced in now is a moderate coalition, let's say 230 to 250 seats for the NDA-led coalition, which I think is pretty much priced into the market now. The market's risen, the currency's risen over the last few months. What's not priced in is the, I think, relatively unlikely outcome of the BJP being unable to form a coalition or having to, such a weak vote, let's say less than 200 seats, that they have to do so many deals with regional parties, that government coherence doesn't come about.